Yeah, I think it's really interesting because there is a lot of chat about the first home buyers being in the market and all these tax changes by the federal government to drive first home buyers into the market, but yet they don't seem to be there. Maybe they were pulled forward to the beginning of the year. Like you said, we've got a lot of people upsizing or downsizing, and it's interesting that all of a sudden you've got investors back in the market.
Yeah, absolutely. I think, look, with the changes, like I know from conversations as well with first-home buyers, a lot of people are still trying to get their pre-approvals. There's been a lot of changes, so brokers are working to sort of help people out. There's been a few changes to borrowing capacity that buyers are generally working through. So I think, look, there is definitely opportunity for first-home buyers, and I think we will start to see a lot more coming through. Like, we are meeting them. They're just not in a position to necessarily buy or pull the trigger at the moment, it seems. And I feel like they feel like they're still getting pushed out by the investors and the people that are making different moves at the moment, upsizing and downsizing.
I think the interesting thing with investors coming back into the market, because the market is normalised from a pricing point of view, the yield is up because the rents in the city are very strong and have been for an extended period of time. So as the market comes back to a level where it becomes more palatable for investors to get into the market. And I think there's a lot of chat about negative gearing and that being removed. But I think what people forget is that if you buy in a company, then you never had negative gearing. And also, it's not that you've totally lost negative gearing. You just can't claim it on a week-to-week or a month-to-month basis. It just gets capitalised and taken off your gain at the end. So I think the savvy investor is actually getting back into the market, and there is some opportunity there. I think when everybody's running from the market, that's probably the time to jump in, and the smart money is coming in now.
Yeah, absolutely. I mean, like on negative gearing, if you're putting $200,000-$300,000 as a deposit into a $700,000 value apartment, that was said terribly. If you're putting enough money into an investment property, you're not as worried about that negative gearing change. And I think we've seen a lot of people that have sold properties recently that are still cashed up, and they're seeing value in coming back into the property market. And those are the investors that we're definitely seeing.
And I think people also forget that after 2 or 3 years, your negative gearing previously anyway did reduce because rents went up and you paid down your debt a little bit. So negative gearing, I think, has pulled some of the investors out of the market, and probably in the bigger housing market where you might be buying $1 million or $2 million houses that are renting for $1,100 a week, it doesn't make sense. But when you're buying $700,000 or $600,000 one bedrooms or two bedrooms sub $1 million that are renting for $800 or $900 a week, the math still works. So I think that's what's driving investors back into our market, which has been really positive for sellers that are on the market at the moment.
Yeah,